this is like the 103rd A. There's a B at 11 a.m. Where Stephen Burke will lead us in a similar update briefing. This one's rather stark, I would say. So, buckle up. At 8:30, those who are allocators and have submitted their surveys, it's my one request. You can join our asset allocation session. So it's part 2. We want to get some Asian input there. And you just go to, I'll put it in the chat. Actually, Nessa, as usual, has beaten me to the punch. Then at 10:30, town hall, 11.
Mark, quick question on that one. Is that a anonymized survey, or can it be done in an anonymized way, or is it's important that it's not?
It is only, it's anonymous to the extent that it's publicly shared. So yes, but I need to know who's doing it in case I need to follow up to see who's the profile. We're sort of, because if you're just a registered investor, then I discount the answers.
And the summary data that I'm going to present is all anonymous because it's all averaged in.
Yep. The great thing is he did this last week and then he couldn't join us. So, well, this is in a way is the real one from Bill. He's the one who did the slides. Stephen and I tried our best. And then, so at 11, we have the briefing. At 11:30, it's the Ukraine update number 5. There'll be some interesting speakers speaking on Russia, Ukraine, and then we have in Europe, and then we have some aid requests, and we got some great wins. And I think many people, too many people to thank, but we've got ambulances being funded, medical kits being funded, soon some telecom, soon hopefully pharma, all because of this network. So with that, over to you, Stephen Burke.
Thanks, Mark. So I wouldn't say it's as dark a view as Mark had, but clearly the world is entering a period where we're going to have massive geopolitical, economic, and societal shifts that are already occurring. And the Russian attack on Ukraine is going to remake the world. We just don't know how it's going to do that, because how much things are going to change, because we don't know how long the war is going to go on for, and just how far President Putin's willing to go, whether he goes nuclear or chemical weapons and all that. We're just not clear on it. What is clear is that the global economy is facing another economic shock at a time that we were just starting to recover from the pandemic, but then that recovery was even starting to weaken. Supply chains were starting to improve, but now they're getting another layering of supply chain shocks to the system, so that's going to weigh on it. The Russian and Ukrainian economies will be devastated for some time. Russia from the sanctions as well as the isolation that's going to come from those sanctions. The system is getting challenged in a way that we really haven't challenged. We're going to see in Europe much higher energy prices, higher food prices, immigration flows that are going to be disruptive too. World food supply is being disrupted, and international alliances are being reconfigured. So we got a lot of things going on all at once that you have to step back and say, everything has to change with what's going on here. The other challenge is the countries closest to the conflict, whether it's through trade or financial or migration links, are all going to suffer the greatest harm, as are the countries and the segments of the population that are most impacted, where food and energy are the highest share of their income. They're going to be greatly affected. So that's why we think everything's changed, Mark. This is a very different period. So let's just go through, the impact of the war. Obviously, we've had some of the highest volatility in the markets we've had in a condensed period in a long time. We've had more 1% and 2% moves this year. I suspect, I don't have the exact number, than we had all of last year. It's really difficult for business leaders and government leaders to make choices about where they're putting money and where they're spending money because of the shifting needs that are going on. But clearly GDP is going to come down. It was already coming down But the big issue is inflation looks like it's going to be higher for longer. And you add to that, now we have a port problem where there may be a strike in June for the ports of LA and Long Beach and other ports in the US. That's going to create even bigger issues there. I think ultimately this leads to central banks talking up their rate moves, but not being able to move them up as much as everyone would like them to. They're going to have to let inflation run longer to buy time for the economy and avoid pushing the economy into recession that they won't have the firepower to get us out of. I think you're going to see big shifts in investments and trading. That's why we think everything's changed. Trade was already being reoriented back closer to home. Supply chains were being made more resilient and safe. We were shifting that emphasis, and I think that's going to continue. I think the other big change for the near term is that energy security will trump the clean energy transition, and that's going to create some different flows and rethinking of how we're supplying ourselves with energy. The big question that people are asking is globalization over? Is it going to be just different? We'll touch on that. But clearly, recession risks are on the rise. We're not as concerned about it for the US as we are for Europe and a lot of the emerging economies. We're not as concerned about it for China either, because they didn't throw as much money at the problem last year. They've been very targeted about how they're dealing with it, but China has problems of their own. So this is definitely a slower growth environment with higher inflation that you really need to think how you're investing in that period. So let's just take a look quickly at some of the key elements. This is a report that came out last week from the OECD on the war's impact on growth on the world economy, the US, the OECD nations, and the Euro area. And this was based on the next 12 months impact if everything stayed where it was a week ago in terms of the sanctions and oil prices and food prices. So we're not in a static state, but just to give you a sense, they're looking at world GDP down a little over 1%, the US down about 0.8%, and Euro closing in on 1.5%. I think these are way short of what it would really be, because things look like they're getting worse and could continue. Without a resolution quickly in Ukraine, I think we're going to see these numbers slide even more. But we're definitely in for a lower growth period, which actually in and of itself will reduce some of the inflationary pressures, because consumers will be redirecting their spending and pulling in their spending, and confidence will be impacted. But we are going to see higher inflation. We're already seeing it, and this comes on top of the higher inflation we had last year. Our view of inflation, for those who've been listening for the last 100 and some odd weeks, was that we thought we were going to be returning to deflationary tendencies. But the big change for us isn't that globalization is over, but it's going to change. And that change of supply chains and the change in how we view the energy transition is going to foster a higher inflationary period for some time. And that is going to be a big change. And you can see it here. This is just for the impact as of 2 weeks ago over the next year. I think one of the big issues, and it isn't at the start of a crisis like this, but it is later on, is the growing refugee crisis and the flow of refugees from the Ukraine. And this is a tragedy of massive proportions, but you have about over a tenth of the country's population being displaced and moving. And I think it's probably even higher than that now because of the surge of the Russian attack. But as this moves up, that's going to create greater strains on other European countries. And as we saw from the Arab Spring and that period with Syria migration, it fell on a few countries, and that disproportionate impact creates bigger strains inside the European system. You can see here the crisis and who's taking the most refugees so far, and it's really fallen on a handful of countries. How does the EU step up and support this? And not only the EU, but how does the rest of the world? What is the US, Canada, and other countries going to do to help with this problem? Because initially, and I asked this question on a call a couple of weeks ago, why is this going to be different than the last crisis on refugees? And it was the answer was because the Europeans. And I think that's right initially, but I think as time goes on, it gets more difficult to deal with the population who is struggling to find work and pay their bills with the higher energy costs, and the country is dealing with inflows of refugees. It creates big internal social strains and budgetary strains for governments. I think that's going to be one of the big implications of this. I don't want to minimize the human tragedy that's going on and all those people that are impacted, but to put it in economic terms, and political terms, this is going to be a big problem going forward. We all know the prices changing on everything, and you can see that here and just run through key elements. But what is a big surprise for the global system is the outsized impact of Russia and Ukraine and this conflict on the global production and global distribution of all these things. And that's going to push governments to really focus on security in a different way than they have in the past. Will be leading to stockpiling and securing trade relationships that are going to give you dependable sources. And to do that, you're going to provide those sources if it's outside your own country. And this is going to create, in our view, blocks that are going to be economic and security and trading blocks that will take this. And I think, I forget who made the comment, Mark, earlier about how does the US and China pair off, or is it going to be only adversarial, or it could be a partnership? And I think the right answer for the global economy is we're going to have to partner in some areas and compete in others. And economically, we're going to have to partner better to deal with our mutual needs. But also, to be world leaders, you're going to have to drive the world economy and the geopolitics in a way that works for not only the democratic nations, but also for some of the autocratic nations and others following different government structures. Gas prices are a big issue, and this is going to continue to be crippling, but this is going to change trade relationships in a major way. You're already starting to see the US and Europe looking at how they're creating natural gas trade relationships. But then you have the countries like the Saudis and the UAE who wouldn't take President Biden's call. That shows you some of the strains and some of the shifts that are going on here, as people need to be clear on who they're going to have economic and political relationships with going forward. We've talked about defense spending. This is not just about ground war, but this is about cybersecurity. It's about space. And security is going to be such a big issue that it's going to drive budgets and really change the agendas for a lot of countries. And in the US, one of the big changes is, what does it do for the Build Back Better program when we're really looking at other crises all at once? And things that are more ideologic and further out are going to be pushed further out, and we're going to focus more on practical, immediate needs, because we're in a crisis right now from what's going on around the world. Fortunately for the US, we're in a good economic spot. Coming into this, we were overstimulated the economy, which was pushing the inflation up, but that's part of the reason companies and the economy is powering through right now, and the US is holding up better. But the duration of the war and how this plays out could alter that pretty quickly, so you can't get complacent. So what does this mean for investors? Well, the central banks are going to be forced to live in the developed economies with higher inflation because they have so many other problems they have to deal with, and they don't have the financial wherewithal to stave off a recession if they're too aggressive in pushing us there too soon. It does mean you want to favor equities over bonds, certainly in the intermediate term, although interestingly, I saw a report today that said that between the first stages of an inversion and before the recession hits, both equities and bonds in the US actually perform positively, which is not what people would normally think. But interesting side note there, it's when the recession hits that things really turn over. We favor the US over the rest of the world. We have for some time, but we thought Europe was going to be a brighter spot coming in, but we now think that the chances of recession are significantly higher there. But we also favor strong balance sheets over weak. This is a quality environment you want to be investing in. The rising rates are going to lead to multiple contraction, and that's going to really put a focus on the quality that I was just talking about. And for some time, we've avoided the extremes in valuations, both the high multiples and the really low ones. We thought the high multiples were going to get sliced, and they have pretty aggressively. But we thought the low multiple ones that earn their multiples by the lack of investment and the mismanagement. And we think that's an area you still want to stay away from. China is the big wild card, and how they play this and how their economy is working and how comfortable they are walking the tightrope between being aligned with Russia because they want to minimize the US's standing in the global economy on one hand, but also their trade relationships are really with the West. So they have a political alignment against their best customers. That's an awkward way to play. So how do they finesse that? I think that's a key issue and one of the great uncertainties. We're continuing to invest in the big trends. We think the US is going to have, and the rest of the world is going to have massive spending needs coming out of this. It will change the agendas, and particularly in the energy transition area. I think this is going to have people realize that the transition requires a management of fossil and renewables, and we have to balance how we get there. And it'll also probably put nuclear back in a bigger way. This earnings and CapEx is going to drive performance. The one thing I'll leave you with is we think this is a time you can still make money. You just have to be focused on the right areas and narrow your scope down to where you want to invest. But there are certain areas that are going to be required spend that have good valuations in this environment that you can take advantage of. A company like Micron is selling for less than 10 times next year's earnings and is absolutely essential to the system. So we look at those opportunities, and that's where we're focused. So Mark, I'll stop there and open up for questions.
Thank you, Stephen. Any thoughts, responses, questions?
Yeah, I have a question.
Yes.
Paula.
Hi, my name is Paula Schwartz, and I work in the refugee crisis in Europe and beyond. So my one question to you would be about the metaverse, because a lot of people are also looking to flee the current realities that we're seeing. And Facebook famously dropped by a massive amount, right? When they changed their name to Meta. So what do you see for the metaverse, and how is that gonna play out? And to extend the question a little bit further, do you think the tech sector will recover anytime soon? I'm sorry if I missed that part as well.
No, that's fine. I'll answer the second part first because I understand it better, I think, than the metaverse. I think the tech sector is a lot of different companies inside there. I think I think you have to separate out the companies that are really growing earnings in a meaningful way versus the ones that in the pandemic were full of hope on the future, but weren't really backing it with earnings. I think that's going to be the big issue. You really need to focus on the more appropriate multiple stocks and avoid the really high multiple tech stocks that were not that didn't really have this sustainable characteristics for growth going forward. I do think that the semi area is an area that you want to be very cognizant of and continue to play that, both the chips and the equipment makers, because the needs are going to continue to grow. We think that the technology sector is going to be the underpinning of all the change that's coming. But at the same time, the supply chain issues are real, and they're impacting the tech area, including the chip area right now. Is the neon gas out of Ukraine is a big issue in terms of the production and etching for lithography and other areas. So we do like the tech sector quite a bit. I think there are some big changes going on as it relates to how countries are using this crisis to strengthen their own national champions. And you're seeing that with Europe as they're approaching the US big tech companies and how they're kind of neutering them in a way to level the playing field. I think there's going to be a lot of movements there that you have to think through. What does the policy changes by Apple mean for advertisers, and what is Google letting Spotify bill directly mean? So I think there's significant shifts going on. You just think if the services businesses get cut, their revenues cut in half because of what Google's doing with Spotify, what does that mean for these businesses long term? So when we say everything's changed, I think you really need to look at everything you own and think about it from, if you were just buying it today, would you still buy it? And is the risk reward the same way it is when you went into it? I think that's the way we have to approach our whole portfolio. I know at ARS, we did that exercise over the last month where we've been going through every name in the portfolios and making sure our risk reward targets are appropriate for that. because of how much things are changing for how the businesses' outlooks are going to be. As it comes to the metaverse, I think the issue you raised about the pandemic and now the war have people wanting to be in an alternate universe so they can, a different reality, so they can escape the problems because we can't believe what's going on. I'm just not sure, and others on the call are much better at this, how it gets all monetized over the long term. But clearly, the interest is really starting to grow here. It's just not an area that I'm as strong at describing as others on the call would be. And Paula, thank you for what you're doing. It's inspiring to all hear.
Thanks, I'm trying, and I could never do it without the community. We just got 10 ambulances funded. It seems like we're closing that. And 361 was essential to actually make this deal happen. So
Well, a lot of people try. You're getting it done though. So thank you.
well, yeah, let's hope it ends soon with the crisis. But
Yeah. Mark, other questions, comments?
Yes, and if anybody wants to hit the metaverse point, feel free.
Hey, Stephen, I'll throw one in. You know, as you were talking about kind of some of the realignments, it struck me as though this is almost like going back to the 1800s and a much more mercantilistic type of view that countries may have to have in terms of securing supplies and security, you know, across a variety of different sectors. Does that seem to resonate?
Yeah, I think I think we're going to end up with real trade blocks and security blocks that if it goes that way, it's really kind of frightening what you think a bifurcated world would be or trifurcated world would be. You have these political alignments that are scaring people, whether it's NATO or whether it's the, you know, alliance with the US and South Korea and Japan and Australia, and how we're creating these defense alignments and we're creating these, you know, trading alignments that are going to go. But when it comes to securing natural resources that are going to be essential for everything, whether it's the rare earths or food and energy, right? How does all that play out, and how do you get national security in a way that is going to be comfortable? I think this is going to really disrupt the global order, and I think unfortunately, I think this is going to be a potentially a longer problem to resolve with the situation in Europe. So I think the longer it goes on, the more it pushes countries to create alignments that are going to be very different than what we've seen before. Hard to say how it all plays out though, because as I said at the start, if you don't know how long and how severe this is going to be and how far President Putin can take it, then in terms of chemical weapons and others, you just don't know how far it's going to push the rest of the world's response. So I do think this is a really, I think you have to look at your investment portfolios and look at how you're thinking about doing business very differently than you did just before February 24th.
So to that point, Bill, you know, we did this 8 a.m. for a reason, because, you know, 2021, China was the darling, Asia broadly, but China in particular. Now I haven't followed it how far where it stands, but I'd be curious for those that are in Asia, how Asia views things that are evolving.
I'm scared. That's all. All right. I work as a customs clearance agent here in Bangladesh, and also, of course, I'm consulting with a lot of companies abroad. And it's like everything was moving in a certain direction the last just 1 month ago, and now everything is up in the air. Okay, we have no idea what's going to happen. Yeah, it's a scary situation right now, at least from the Bangladesh point of view. At my point of view, at least. Maybe others don't feel that way over here, but yeah, it's weird.
Fair enough. Others? Did Rob drop? Just curious.
Yeah, I mean, from my side, probably, having sat for 2 years stuck on this tiny little red dot of an island in Singapore and being quite resentful of it since February the 24th, I've probably never felt like it's been a better place to be sat for its neutrality. And it's, you know, it's not Hong Kong, it's not China, it's not the West. Yeah, I mean, super interesting, Stephen, the analysis. Everything has changed. I totally agree with you. I think the one thing that's coming into stark focus is that aside Zelensky, there is a vacuum of leadership in the political halls of power everywhere, right? And it's quite scary watching. I was chatting to someone about, you know, the implosion in the Chinese stock market in the last 4 weeks and the impact that that's had on private markets, fundamentals, and, you know, then the unguarded comments of President Biden and commentators being like, get this guy away from the microphone because he's more dangerous than he is adding good. You know, the net beneficiary of being a Brit by birth, at least, is probably Boris Johnson, who's made a few of his short-term problems go away through this. But yeah, I mean, it's super interesting times. I guess the interesting opportunities that emerge from this are, where do the outliers, you know, where do the outliers come into the frame, right? So I was just reading an article about, you know, Indonesia's nickel mining and the opportunity for Indonesia to rise. Australia obviously being hugely resource rich in a number of the commodities that the commodity cycle we're in, super cycle we're in. It's going to be interesting. And I think the other interesting one is where will Japan end up out of this, because they've sat with sort of nuclear neutrality and the only country in the world to ever be attacked with a nuclear weapon. And it'll be super interesting to see where they end up out of all this. But yeah, super analysis, Stephen. Super interesting. Food for thought.
Hey, Rob, I have a question for you. How do you see China playing this out? Do they try and be a peacemaker to favorable terms for them, or do they try and just let Russia go the way they're going and choose where they want to play militarily and economically?
So, look, I think the one thing that stands in the favor of the world at the moment, because President Xi does quite scare me, because I think, like Putin, he's a bit of a maniac with the lack of global viewpoint and too much power and too much consolidation of power. The one thing that does actually reassure me is the COVID scenario in China at the moment is still prevalent. So, you know, whilst the rest of the world's moved on, and, you know, the travesty happening in Ukraine means that people in Ukraine, you know, and all of its neighbors who are taking the flood of refugees really can't focus on COVID. They've had to move on. And the US and the UK and Western Europe have sort of moved their agenda on. China is dealing with a domestic crisis that probably provides a bit of a make weight for the world. So I think that you know, President Xi's not going to weigh in with anything until he can sort out his own, you know, if he can't get his own house in order in China and stop the lockdowns in its major cities, he's not going to wade into a big diplomatic scenario, because he's probably going to watch with interest and see, you know, like, I'm no Russia expert. There's way more Russia experts involved in 361 than me, but, you know, I've got a few friends in Russia, and those expats who still base themselves in Russia, they're obviously cautious about it, but I think everyone kind of hopes that someone is going to step up either from the military or the oligarchy and remove Putin from power. And I guess Xi probably wants to sort of take a watching brief, because he's staved off enough challenges to his power over the last decade or more. But all it takes is for the combination of all these factors that, Stephen highlighted many of the acute ones. And I think the one that I put on Mark's form, I think the one that I think you've had Simon Littlewood come to your events in the past, right?
Yep.
I had a fascinating dinner with him about 3 years ago, and he said the next major war is going to be about food. And this war wasn't about food; it was about, well, a maniac and maybe a few factors, energy, other factors. And look, it scares me from the perspective that I spend most of my waking hours wandering around climate impact and how to invest in the climate transition. It scared me, that bullet point you put, Stephen, that climate transition, the energy transition, will be sidelined by energy security for the foreseeable. Yeah, I mean, that's the big factor, right? Is in China, people have learned to get, easily get food and consumables. Slightly different to India, where there's still widespread poverty in many domains. But that's probably the big challenge: food supply.
We're 8:33. We need to transition. I'm going to give it a few more minutes before we move into, and some of these same themes will be discussed. Again, we're asking everyone to have done the survey. This is our one condition of participating. But Francis, you came on camera, and I did ask for Asian perspective. So did you want to chime in?
Yeah, I actually did. Thanks, Mark. Stephen, I've been hearing a lot about the supply chain reshoring, and it's particularly been a big theme within the investor community. Each time I look at this supply chain issue on behalf of our clients, I keep kind of running into this block in that if we move away from Asia or Southeast Asia and come back to the United States, Mexico, or places closer to home, let's say, even if it's Europe, then you're going to be looking at Eastern Europe, maybe as a better option than Asia. But each time I look at it, there's a significant economic cost, and at the end of the analysis, the clients continue to choose sourcing from China, Southeast Asia, and so I'm curious as to why there continues to be this, Larry Fink letters that continue to come out, but there's a disconnect from what I see on a day-to-day basis of people not actually reshoring because the regulatory environment's not changing in the United States. There's not more labor available in Mexico. It's still expensive. It's still time consuming. So it's theoretically, it makes sense, but I just don't see it. And I'm curious if I'm missing something, outside of tech. Yeah, it's blocked off, but consumer hard goods, soft goods, which is a big part of what supply chain is all about, is not moving as fast as Larry Fink is telling me it should.
Well, I think it's a great question. I do believe that the transitions, all these transitions take time. So you actually have to, from the time you wish to do it to the time you can effectively make a supply chain transition, it's not short time period. So it takes time. What's happened now is companies and countries have now been given the motivation to do it. They didn't really have the motivation before the trade wars and the sanctions really kicked in the way they have. And I think what's different right now is the degree of the sanctions that were put on Russia, particularly as it impacts the SWIFT system, are having implications for companies right now, thinking it's one thing to lose Russia, which is going to hurt companies, 3% or so of their revenues go out of Russia. But suppose we had to put those sanctions on China, then all of a sudden, and you can't trade with China, then you're in a completely different boat. And I think what's happened in the last month is people have woken up to that is not beyond the realm of possibility. And therefore, you really have to start moving supply chains around. The other thing that's happened, and it's because of robotics and the advancements in manufacturing, we are able to bring stuff back and do it in a competitive manner. So one of the elements is you can't bring it back to just get lower costs, but I think this is a big mindset shift between security and supply chain security and resiliency versus costs. And I think that change is going to be one of the big shifts that occurs. And that's what's going to push reshoring back. It's in the early stages of moving, but you're going to see it. And the Midwest is going to be a big winner in this, because we're going to bring back manufacturing to updated plants, but we're not going to be doing it with the same level of manual labor. We're going to be doing it in a more automated way that's going to allow us to be more competitive if we do that. But I think one of the key elements and one of our inflation shifts in our view is that when you do that, make that change, you're going to embed a slightly higher level of inflation into the system. So I think this is one of the really tricky transitions that we're going to see, and who can do that and who has the political willpower to do it, because you need government support to make it happen. And the government support has to come not just from, allowing or giving favorable tax stuff, but it's also going to get into environmental issues. A lot of the stuff we sent away because it's not good for the environment. Bringing that back, we're going to have to deal with finding ways to do it better environmentally too. So this is why it gets complicated, but you're not seeing the growth in labor in some of those other places either, that we're being like China has a wage issue, that they've been raising wages so much that they're not competitive with other Asian nations now. So we're not going to be chasing lowest cost production. We're going to be chasing more secure production. I think that's going to be the shift, and that leads to slightly higher costs.
And lower ROEs.
Yes. Yep.
I think that's at the center of the discussion, right? If you look at previous attempts of restocking in much lower degrees of what's happening now with SARS, right? I mean, people had started to accumulate PPE, and then it rotted and expired on shelves, and that was a cost that had to be sunk, and less returns that were made. So it's a clashing force that you have to compete with in terms of being able to get to the solutions that Stephen, you're proposing, which I think make complete sense.
It's also what pushes the shift to use technology in a bigger spend, and you're seeing CapEx towards technology growing at the fastest rate of almost any spend around, other than maybe cyber.